Stock market benchmark indices Sensex and Nifty crashed nearly 3% on Monday following extremely weak trends in global equity markets amid fears of a slowdown in the US economy. This steep decline in the Indian equity market on the first trading session of the week resulted in a loss of nearly 15 lakh crore rupees for investors. What happened over the weekend was the first question on the investors' minds. Experts attribute the fall in the Indian stock market to global uncertainties, particularly signs of a potential recession in the US economy.
So there were negative news flows from many parts of the globe which led to a sharp sell-off in the global equity markets. Our markets too has witnessed a very sharp up move in the recent past. If you look at last couple of months after the elections results, our markets had rallied very significantly that continued its up move post the budget too. However, much of the positives were already factored in and the events were behind us. Hence, this global market volatility has led to a sharp down move or a corrective phase in our markets too.
The July employment data in the US released last Friday showed the unemployment rate jump to near a 3-year high of 4.3%. After that, Goldman Sachs economists have increased the probability of a recession in the US to 25% from 15% in the next 12 months. Apart from fear of a US recession, rising tensions in the Middle East is another factor behind the turmoil in the stock markets. According to some experts, the valuations in Indian stock market are quite inflated due to sustained liquidity flows, which is poised for a good correction. On the technical front, Nifty has closed below the 20-day simple moving average, which is an indicator of weak sentiments in the market.
This is kind of a liquidity-driven issue. So once there's nothing wrong with the fundamentals. Yes, second reason could be that US may not have a soft landing. Now that is again assumption, but carry trade is reality. That is what is happening. The stabilization of geopolitical situation in Middle East is also having some kind of impact. But overall, there are negative factors which are playing on the global markets, and we are taking cue from that.
Some experts, however, predict a bounce back in the coming days, citing strong fundamentals of the Indian economy. Experts have advised retail investors to avoid panic buy or sale and stay invested in quality stocks.